Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts. In today's video, I want to speak about USDJPY because at the moment we do have quite interesting price action and structure. Starting here on the monthly, we can see how the market has just broken above a very strong level of previous monthly resistance, which is now turned support. We did expect, in fact, a retest of this previous monthly resistance turned support, and then for the market to start a rejection to the upside, which is in fact exactly what the market is currently creating. So here on the monthly, everything has been developing exactly like we usually expect in a situation like this, and we could expect more bullish price action to develop. Dropping down on the weekly, what do we have? Now, from a weekly perspective, we can see how the market just printed a strong impulse followed by a correction, and at the moment it just started the continuation higher. In general, when you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse, and what we can notice, in fact, is that we had a retracement exactly to the 0.618, which is also the golden ratio, a Fibonacci retracement, which is the level to which most of the times you will see the market create a correction to before then printing a move higher. And in fact, in this case, the 0.618 was lining up also with previous weekly resistance, now turned support, creating a confluence of support at this level that we did in fact expect the market to reject to the upside after a test of it. Now, if we drop down from the weekly to the daily time frame, what we can notice is that few patterns have been created here. First, the market printed this M pattern. After the creation of the M pattern, I made a full breakdown explaining all the reasons for which first we wanted to see this move to the upside for the completion of the M pattern at the neckline, which the market did, and then we wanted to see the continuation lower, and again that is what the market printed. And by the way, I will link in the description these two previous analyses so you can go and check them out for more free education. However, at the moment we can notice that in rejecting that weekly confluence of support area that we have just identified, from a daily perspective, the market is currently printing a W formation. And in general, after the creation of a W, what we would like to see is for the market to provide a rejection to the downside to go and complete the pattern at the previous resistance turn support. So from a daily perspective, we could expect more short-term bullish price action, but then a drop lower for the completion of the pattern at the neckline before then a rejection higher, which is basically the exact opposite of what was happening here. So we had an M pattern, we wanted to see the completion and then the move lower. In this case, we have a W formation, so we would like to see first the completion and then a move higher. Now, if we go and see what we have when we go and see the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, specifically from an institutional perspective, and we check the data on the JPY, we can see how with the last reports, we actually went from minus 110k net positions all the way up to minus 42k, which is one of the highest levels that we had in the past few months, indicating that massive strength is coming to the JPY slowly, but is still coming. Why do I say slowly? Because we still have negative net positioning, indicating that we still have way more shorts than longs. However, we are starting to see an increase in the net positioning, which could easily make the JPY stronger, and a strong JPY is exactly what we need for the correction to the neckline and the completion of this W formation. So how we could be approaching this potential rejection lower and the completion of the pattern at the neckline. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4-hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to a bearish market and provide to us one of our valid entries at that point, we could be looking for this potential rejection to the downside for the market to complete this W formation at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. In the course, you gain access to all my lessons, also all the rules of the strategies, and you also have the possibility to access one-on-one mentoring, web market breakdowns with Telegram signals, the COT data software that we have just used for analysis, and also the trading station software, which puts together everything that you need as a trader all in one interface. Now, if you scroll lower, you will see that at the moment I'm running a massive promotion in which you have the possibility to join with only 97 euros. And since I have partnered with the forex broker Blueberry Markets, you have the possibility to get a full refund of the mentorship program price credited in your trading account. So if you scroll lower, you will see that you have the possibility to join here and gain automatically access with email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. And I will see you in my next video.